Hey traders, this is Ron Haight at Market Tamer. Happy Sunday. Hope you guys are having a great weekend. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. I'm going to use TradeStation tonight. I'm short on time for Monday. If we use TradeStation, I'll try to change the background. Otherwise, we're just going to go with black. So what do we got? The purple line is the 200-day SMA. On the diamonds, which we're looking at now, which is a daily chart, we broke below. If we look right there, came back down. Start June, now we've come right back up, and we've closed above the 50-day institutional moving average. So the two institutional moving averages, orange and purple. We got above the purple, now we've been closed above the orange. Yeah, we felt we closed off the highs of the day on Friday, but we still took out some of these other swing highs, if you will. The target from a purely technical perspective is the all-time highs, which would be about 600 or so points higher on the DIA. If we go to the S&P 500, similar story, closed off the highs of the day, but volume was still decent. We closed above the 50-day in orange, and we also barely closed above some of these other closing highs. Target all-time highs. If we take a look at the Qs, they finished about 2%. They have not closed above their 200-day. Now, this is in part because of the DOJ, FTC investigations into Apple, Facebook, Amazon, and Google. But if we get above there, there's this little swing high here, and then we go up here to the highs. But Qs are lagging, SPY and Diamond doing the best. The IWM, the small caps, they're not even above their 20-day. Now, here's the lag again. Remember I told you how the IWM and the MDY, the small caps, mid caps, were lagging. Then they sold off first, and now they're rallying, but they're lagging. Again, not a good sign for the whole market, as it's going to be difficult for the whole market to go to new all-time highs if the Russell, which you're looking at right now, and the S&P mid caps can't get above their moving averages. So IWM is the worst, MDY second worst. Now, if we go to a weekly chart, if I type in weekly, we're right at that cluster of moving averages on MDY. This would still be cautious on the weeklies. If we go Russell 2000, we're not above anything. This is still bearish on the weeklies. If we go DIA, the Dow, that is almost bullish engulfing too. The Dow is looking bullish now on the weeklies. How about the Q? Let's do spiders, SPY, looking bullish on the weeklies. Qs, getting there, but not quite. So again, Dow, spiders looking the best. Just really quick here, we'll keep this video short and to the point. If we look at gold on a weekly basis, it has broken out over a previous swing high. However, there is this cup and handle, and you're probably going to hear different folks talking about it. It absolutely is a cup and handle, but we still have these highs around, let's say 130 to get above. If gold gets above 130, that is newsworthy, especially on a weekly chart. If I go back to a daily chart on gold, you can see, the cup and handle doesn't look quite as nice. It looks way better on the weekly, but again, we want to get up there towards 130. Problem, silver, it's really lagging. That's the daily chart. Here's a weekly chart. If I zoom in, silver is really not coming along for the ride. Therefore, due to its underperformance, just like the Russell, it's hard for gold to push higher with any staying power when silver is not coming along for the ride. It's just a market divergence. Here are the gold miners, GDX in the weekly. They have a lot of inner highs or other swing highs around 25 to get above. So it's looking good, but there's still another 10% until we hit that big resistance. Going to a daily chart of GDX, if I zoom out, you can see there's some highs here, and then we have highs up towards 25 as well. Bonds, just really quickly, they went vertical since May. If I zoom out, there's only about a 1-year chart in here. It's staying above the blue line, which is, I believe, the 5-day EMA on this chart, and it's staying above it pretty good. And then let's just take a look at banks on a daily chart. XLF, they'd have to take out the highs here at 28. If we go to transports, IYT, underperforming in a big way. In fact, it's sort of slanted, but this is still head, left shoulder, right shoulder, not looking good. And the semis, they're not doing so hot either because of the, either you want to call it trade wars or investigations, but they came down pretty hard, broke the 200-day. Now they're trying to rally. The semis, we need to get back above the 50-day around 109. If that happens, then the target would be back up to those highs. So that's it. Nice short video. We'll talk about some more individual stocks on Monday. Wish you guys all the best. And remember, caution is still warranted on some of these charts, but the diamonds and the SPY are starting to perk up, and the momentum is now shifting to the bulls. Have a great day. See you next time.